Hi, I'm Steve Rhodes with TFNN, and I want to wish you and your family a happy new year, a happy holiday. And I want to take just a brief moment of your time to take a look at the Dow Diamonds. I want to be able to teach you something. In fact, I think I can teach you a couple of things. It doesn't matter what level of technical skill you're coming from. There's always something new to be learned. Let me give you an example. Let's take a look at the candle problem. This is a problem that was used as a test by Carl Dunker back in 1945. What he did was he gave participants a box of tacks, a book of matches, and a candle, and the outcome was to be able to attach the candle to the wall, be able to light it without the candle dripping wax. That was what your mission was. Now, most people said, hey, why don't I take the tacks and I'll tack the candle to the wall. Some folks said, why don't I take the match and I'll light half of the side of the candle and we'll stick it to the wall. The problem is when you light the candle, it starts to drip and it hits the table. Now, if I were to show you this exact same picture, but just take the tacks out of the box, maybe if you looked at this, you might say, hey, here's the solution. You're looking at the exact same elements, just a little bit differently. Some of you might have come up with the solution right here, which was just simply tack the box to the wall, stand the candle up inside, light it, voila, the candle's lit, it's not dripping, it is not hitting the table. Now, the solution was always in front of us. Now, when we take a look at the Dow Diamonds chart, I want to be able to teach you what it's been doing, how you could have interpreted this so you would understand, should you be in, should you be out. Now, this is a Dow Diamonds chart going back into the 2003, 2002 time frame all the way through present. Now, looking at this stock chart, it wasn't that long ago that I can remember looking at this and it looked like gobbledygook to me. I wouldn't know what in the heck this meant, and maybe that's the stage that you're coming with. One of the things that I've learned is Japanese candlestick charting, but to try to teach you this language here, what a piercing candle is at the lows in March 2009, how you would trade that, these different bearish engulfing candles, that would certainly take time, and I would be happy to do that, but that's not going to allow me to compress decades into moments, and that's really what I'm going to do, is be able to compress decades into moments. Now, what I've done is let's get rid of those candlesticks and instead let's apply the Rhodes Momentum Indicator Notations, a series of letters, either red or green, marked in this case here with U for uptrend, D for downtrend, and to allow you to understand what the trend of the market, the trend is your friend. If we take a look at the Dow Diamonds on a monthly chart, you can see that it's making primarily red candles out here. It's made one little pullback out there. But the question still would become, okay, Steve, I see that it's an uptrend, but how do I trade that? What other tools are that I can use? Well, one of the things that I did was I color-coded this system. Red is like a red light. It means, boy, have a tight stop in place or exit the market or maybe even take a short position inside the market. The blue areas here, I couldn't use green as a green light to go ahead and take a long position because the candlesticks are using red and green color. So I went ahead and used a dark blue on that. The light blue tells you that that's a really strong trend to the upside. Yellow just simply is a caution sign. You know, just as if you were coming up to a light and it was turning yellow. You'd put on the brakes, maybe you'd tighten your stops. Right now you can see here, as of December 16th, we are in the super strong bull market area of the Dow Diamonds. But this would not be enough. I thought that I could add a couple of other tools. Here's a little dashed line out there, and this dashed line can be used as an area of support or resistance to help you to understand when to exit the market. But the reality was when I applied two different tools, and I'm going to be sharing this with subscribers this coming Thursday evening, when the solid line crosses through the dashed line, boy, you should be heading for the exits. Likewise, when the solid line crosses over the dashed line, this is telling you to stay in the market. Even on a monthly basis, during this pullback right here, back in the July time frame in 2012, from a long-term standpoint, you would use a long-term, a monthly chart, a weekly chart to manage your retirement account funds. This would tell you to still stay in. You should still be in the market as we speak today, and this is in the Dow Diamonds. Now, the key to life is a sense of urgency. And I know it's the holiday season. I know how precious time is. But in 1 hour, I'm going to be able to teach you how to utilize that stock chart. It doesn't matter in any stock chart, how to be able to apply the Rhodes Momentum tools. It's going to be this Thursday. It's December 19th. Access is easy. It's free to subscribers. If you're not a current subscriber, you can get a free trial. That free trial includes 1 month of my newsletter service. It includes my money management workshop. It includes the position size calculator, and really you have access to all of that for no deposit, no charge to your credit card. And after 29 days, if this isn't worth it to you, you've at least allowed me to give you this gift this holiday season to be able to teach you about a tool that will absolutely change the way that you trade. If you've ever been on the wrong side of the trade, you will no longer be on the wrong side of the trade. Folks, have a happy holiday, and I'll look forward to seeing you soon. Take care. Bye-bye now.